Um, Look at the stocks, for example, IRCTC, Coal India, NTPC, Power Grid, even IOC, HPCL. So it's primarily also the non-banking PSUs. I should also add that. To talk more about this, we're being joined by Harsha Upadhyaya. Good morning. So much is always said about PSUs that the government makes the right noise, intentions may be good, but the delivery and the execution doesn't always match up maybe to the market's expectations. But first up, starting the conversation, PSUs come back and how? How are you looking at this?
Good morning. As far as PSU stocks are concerned, I think there was never a debate in terms of whether there is intrinsic value or not. It was just a question of the mood of the market and also how the business outlook will change for some of these businesses. While the ownership is common across PSUs, we need to see what are the subsegments that they are operating in. When you look at financials, for example, PSU financials, two biggest concerns in the past were about capital adequacy and the quality of the asset book. I think both of these concerns are behind us, and the provisioning levels have gone up through the pandemic. The asset quality issues have held up during the pandemic. So PSU banks are reasonably placed at this point of time when we are looking at improvement in the credit growth. Similarly, when you look at many other segments where PSUs are operating today, whether it is oil and gas, power, logistics, or defense manufacturing, many of these segments are seeing a better outlook going forward. And also, the companies have reasonably managed the entire crisis of COVID pandemic. And at this point of time, seems to be in a position to cash in on the improved outlook that we are likely to see as economic momentum comes back. So all in all, I think suddenly this is one pocket which is still continuing to trade below intrinsic valuation levels, and also relative to other sectors in the economy. I think some of these pockets are still undervalued. So that's where new renewed interest is coming from investors to look at some of these companies.
So you are saying that right now the prices might be attractive as far as the PSU banks go. It's only a matter of time. But Harsha, there are a lot of other stocks where we're trying to figure out what's going on. IRCTC, is this the government's play for a platform? Whether it is cruise liners, it might be starting. But the kind of run-up that you've been seeing, are they justified?
See, again, as I said earlier, PSU companies is not a homogeneous basket. While the ownership is common, we have different industry segments getting represented by these companies. And we will have to evaluate in terms of valuations and growth from a bottom-up perspective. Yes, there are some pockets which have really run up in the past, given a lot of change that has happened in that particular segment, and also the kind of expectation that are built on the digital business, etc. That's one part. But there are also other businesses which have not been looked at by investors keenly in the recent past. So there is still a value in some of the other pockets. And many of the other segments, take for example, logistics. With trade and commerce picking up, with the freight corridor coming up, there will be definitely a lot of positives from a business perspective into logistics space. And you could play that through some of the PSUs as well. And look at the government policy on defense manufacturing as another example. Government is looking to bolster indigenous manufacturing of defense equipments, ammunitions, etc. So that's something that will keep some of the defense manufacturing companies going for higher growth, at least in the medium term. Similarly, there are ESG considerations and increased power demand, etc., which are leading to an uptick in oil and gas segment as well as fossil fuels and in the power generation as well. So I think there are different dynamics that are playing out today, and in many cases, the ignored section of PSU companies are kind of market leaders in those segments. And now that the prominence is coming back to some of these sectors, we could suddenly see the outlook for some of these companies from a stock performance perspective changing meaningfully.
Harsha, many were, basing their investment thesis within PSUs on the fact that it's going to be a successful Air India disinvestment, and BPCL as well should happen very soon. What if these two were to get delayed, as they already have, time and again in the past as well? Would you say that this entire theory of PSEs actually, springing up gets challenged in that case?
Definitely, that's an important aspect to look at. Yes, there has been a delay in privatization due to COVID pandemic, and we still are not very sure how that's progressing at the current juncture. But what is giving confidence to markets in at least some of the cases is the fact that the government holding in many of the stocks has come down to the lowest levels possible. And also government has made it clear that they are open to privatization. Maybe there is a delay in the current juncture, but even going forward, they would be looking at such opportunities. So given all this, it seems like the frequent offer for sale which used to come into the market and which used to kind of put pressure on the stock prices may not be coming up that often going forward. And if at all, it would be more through privatization or strategic disinvestment. If that is the case, then I think the valuations will not suffer in our opinion.
Interesting. Though on the other hand, Harsha, what's very interesting is what's happening with the entire power space and the power ancillaries as well within the entire PSU pack holding out. I don't know whether it's the China impact or whether it's the rotation in the market which is taking place where the power sector is actually playing catch up. Or is it the fact that, power domestically as well has seen a huge spike up because of the weakish monsoons, etc. as well, kind of factors? But do you merit that this is a long-term story at play, or would you say that this is just at best a short-term, aberration that one is seeing within the power sector here?
We believe almost all of the factors that you mentioned in combination are working for the power sector at this point of time. However, we are still not sure about the long-term wealth creation in power generation, especially thermal power generation. We do have some position in power generation in our portfolios, but I would say that it's not been a core part of our portfolio. We would look at it more as tactical at this point of time. And also, as you rightly mentioned, we are in a phase of a market which is showing very, very frequent rotation from one underperforming sector to another. So we need to see whether some of these fundamentals which have turned for the positive in the power sector will continue to remain that way or not. And subsequently, we will be able to decide whether to hold it for a medium to long term or it's just going to be a tactical position. But clearly, some of our portfolios have exposure to some of the power companies.
Harsha, Alex coming in, I do want to get your view on the metal counters because obviously the underlying has been in focus almost throughout of this year. What would you say about the likes of Steel Authority or what would you say about Hindustan Copper? How would you rate them in light of what we've seen in the recent past? And are they counters to bet on if someone is to say that you're betting on a global rally that will continue for the next many years in commodities and specifically in metals?
Alex, I would not like to go into stock-specific recommendations or clarifications. Having said that, on the metals overall, we continue to remain positive. Although over the last 4 or 5 weeks, we have gone a little bit negative on the ferrous metals, given the fact that there has been a concern in the Chinese real estate market emanating from Evergrande and also the kind of regulatory clampdown that we have seen in that space in China. So what it means to ferrous metal demand going forward is something of a concern. However, we continue to remain very positive on aluminum, for example, where we believe the ongoing decarbonization move in China, where they are shutting old capacities or they are making more investments to bring it into a right level of environmental standards, etc. So that's definitely keeping the overall demand supply situation in favor of manufacturers. And also the new manufacturing that's likely to come up will come up at a reasonably higher cost, which means that the significant pricing strength that we have seen in the aluminum metal will continue to remain firm for some more time. So given this, and also the fact that when you look at Indian companies, they are also looking at deleveraging in a very, very focused way. We have already seen significant deleveraging both from ferrous companies as well as non-ferrous companies in the last 12 to 15 months. And given the pricing strength and the demand structure, we expect that that deleveraging process will continue even going forward. Given all this, I would say that we continue to remain positive on the metal space as a whole. However, over the last few weeks, we have gone slightly negative on the ferrous metals, but continue to remain very bullish on the non-ferrous one.
All right, Harsha, thanks so much for joining in and giving us a perspective that you did on multiple sectors and basically on the entire PSU basket. We'll talk to you soon, I'm sure. Let's